and welcome to the extensive weekend video, which is focused on equities, yields, and of course US dollar. This is what this will be about, and I will start with the US dollar. It was pretty easy to make that call weeks ago, short months ago, as we were heading into the Liberation Day, that US dollar is in kind of a very corrective, clear downtrend danger, and it had unfolded. And of course we are seeing continued selling, flirting with new lows. And would you say that this is near the bottom, confirmed technical bottom? Given what yields had done on Friday, based on the incoming data, I mean especially those personal income ones, would you say that US dollar is near some kind of a technical support? This has been characterizing this week's call for continued US dollar depreciation, and here we go. And you can see as well how greatly is the yields retreat working on the short end of the curve, which had formed another leg of my yields prediction when it comes to treasuries. It is kind of similar to US stock market appreciation, well before and as well after the key 7-year auction in the latter half of this week. So we are seeing quite a move in yields, and it is already starting to bear on real estate, home builders, and similar interest rate sensitive sectors. So compare for yourself whether these are trending somewhere or merely refusing to decline any more. Such is the weekly perspective of S&P 500 following the stunning Middle ceasefire announced on Monday. We are seeing a quick, steady ascent in prices, and well, before the midweek session we had seen those non-confirming market breadth readings already worked off, and as the week progressed it was possible to have greater and greater confidence in one's long calls. You can as well see how individual sectors had been performing and whether it had been rather growth, Fintech, or value stocks that had been leading. And you know what is a greater marker of bull uplegs, especially given what financials are doing, which had been for quite some time my sectoral pick to outperform, to lead, to cushion S&P 500 on the downswings, and to lead it on the upswings. Key long-term chart is the McClellan Summation Index, where you can see that following the Liberation Day and tariff pause 90 days for those trade deals, and you know about all that Canada brouhaha at the end of Friday, and how I called for steady buying to resume into the end, which is exactly what it did, and it is very encouraging to see that at the very end of the week to see institutions stepping in the power hour and putting more money to work on the long side, and it's quite nicely reflected in the McClellan Summation Index. So this is a marker of a very finely unfolding upline. The early picture nicely shows the practically steady buying with 1 day of indecision marking this week, and those percentages of stocks trading above various periods of their moving averages doing very nice. see how the 50 line held when it comes to those percentages trading above 200-day moving averages days ago, and that had been one of the most important factors for swing traders. Friday's daily perspective, very nice, very nice. Risk of daily, and yet did you see S&P 500 retreating? Very nice, healthy sign of daily rotation, showing that either tech has to be powering higher every day. We have coin, we have stablecoins, dependent financial landscape disruptors, which had been and will be still doing great. On a 5-day perspective, the picture is so clear why it's making no sense to sweat daily underperformance within tech, within semis. This is still looking great. You see financials and tech doing very nice, and communications, industrials, suffice to say. My joint page for help you slide was right for the best on what and how you trade. Go with daily analytics and intraday channels to have 100% access to what I do.